Hey everyone, just wanted to go through the down payment program for renters today. So, this is a new program that just launched. They haven't even processed any applications yet, so you're getting in at a great time. So, let's go through and we'll take a look at what you need to do to hit the ground running on this one and who's eligible. So you have to be 18 years old. You and your current spouse must not currently own any residential property. So you can have owned in the past, but as long as you're a renter right now, you're good to apply. You must not have liquid assets between all the members of the household. Anyone over 18, actually, they have to be less than $100,000. The maximum home price that you're eligible to purchase under this program is $500,000. The maximum income is $95,000 for a single applicant or $115,000 for a family. You must currently be renting in London or Middlesex. I did verify that if you live with your parents and don't pay rent, you are not eligible for this program. You must live in the home that you're purchasing, no renting it out. So, not even a bedroom, nothing, must be for personal use only. You must be qualified for a mortgage and be financially sustainable. So we'll go through what that involves in a later slide, but you do have to be able to qualify for a mortgage. You must cover all closing costs, so that would include the 1.5% that we usually advise of your purchase price to have on hand for close. So that includes lawyers' disbursements, land transfer tax, that sort of thing. So you do have to have some cash available. You do have to get a home inspection, but we can put that in as a condition after you get approved for the program, and you are obligated to sign a loan agreement. So, this is the order of steps in the process, which for me was a little puzzling. But first, you're going to get pre approved for a mortgage, obviously. That's the most important thing because if you're not able to get a mortgage, then all of this is a moot point. Then you're going to gather the application, take a look at what's going to be required, start getting your documentation together that would go with your application. Because once you find the house that is what you want, you then would put in a conditional offer on the home and you need to submit that application right away because no seller wants their home tied up in a condition for very long. So right now, the City of London is saying they'll acknowledge the receipt of your application within 2 weeks, which, to be honest, isn't very reassuring. I did speak with someone who said because they don't know how many applications they'll be processing at a time, they can't give a timeline. So the sooner you get this in, the better, because they currently do not have any applications. So definitely better to do this sooner than later. Once you are approved, you could then get your inspection. And once that's done, you would waive all the conditions and you would have a firm deal, and all that's left would be to move in. So, to get a mortgage, I just want to quickly go over this. And if you need help with this and understanding what's all involved, we can book a one-to-one session afterwards. But you need to have a stable income. So, you need to show 2 years of employment history. Usually, it would have to be with the same employer, but if it was with the same industry, for example, you were a nurse and you switched hospitals, that is something they would consider. You also need to show your most recent pay stubs, usually the last 2 to 3. You often need a letter from your employer. You will need T4s and a notice of assessment for the past 2 years. The letter of the employer would also need to show that you're full time permanent, you're not on probation. If you're self-employed, it's a whole other ball game. So you'll need to show your business financials and full tax returns for 2 years, along with bank deposits. Down payment we won't go into because obviously, if you're part of this program, you don't need a down payment. You need to show a fairly good credit profile. Most lenders are looking for a 680 plus. There are something called a B lender. Those rates generally can be a bit higher. So you would need to factor all that into your TDS and your GDS, which is the amount that your mortgage, heat, and property taxes would be that cannot exceed 39% of your gross monthly income. And total debt service ratio is the housing portion plus all of your debts, which can exceed 44%. So that is what's required to get a mortgage. Um, what else? You also will need to have the property approved by the lender. So they may want to send out an appraiser to take a look and make sure the house is in good condition, a good location. If it's a condo, then you'll need to have the condo docs examined, and that would be an expense to you as well. They'll want to make sure that the condo board has sufficient funds if there's any capital repairs and that sort of thing. See if there's any lawsuits against them. You need to have the closing costs that I mentioned earlier. So you'll have to show 1.5 to 2% of the purchase price available in your bank account. You're going to have your ID and documentation. Um, yeah, I'm not sure what the slide is getting at. What trips people up the most is you don't disclose all your debts. Trust me, they will find them. They pull a full credit report. They will find them. I had a client 2 weeks before close have a student loan in the United States come up. You don't want this happening a week before you're supposed to close. So make sure you disclose all debts and buy now, pay later accounts. You can't have any large unexplained deposits in your bank account. They do want to see a money trail for all of the money. This is mostly due to terrorism financing. There's a lot of rules that the government has put in place to track where money is coming from. You don't want to have self-employment income that's aggressively tax optimized. You don't want little tiny credit blips that have ruined your score. Not going to help you. So this loan is basically you get 5% for your down payment. Ideally, you would live in the home for 20 years and that money would become yours free and clear. So if you purchased a $500,000 house, you'd get $25,000 for your down payment. As long as you live in it for 20 years, that money is yours free and clear. You owe the government nothing at the end. However, time and unforeseen occurrence happens, you need to sell it before the 20-year term is up, then you have to pay back the original funds plus 5% of any capital gain that you've made on the house. So any investment income, whatever the house is worth over what you purchased it for, is your capital gain, and you have to pay back 5% of the capital gain. So what does this look like? If you purchased a home in 2005 as part of this program and sold it in 2010, you would have owed 33,250 back to the government when you sold it 5 years later, but you would have gained 131,750. So it's still worth it. You sold it in 2025, say the month before the 20 years was up, you would have owed City of London $60,000. And that seems like a lot given that you only borrowed 25,000, but at the same time you also made $640,000 in the purchase of the house. Now, the last few years were certainly unusual, and so if we actually looked at historical increases, it's 3% is usually what the increase is year over year, not the, what was it? 33% of 2020. So with those numbers in mind, if you bought a house today for $500,000, in 20 years, that house would likely be worth $903,000 if we use this 3% per year number. And you would owe the City of London, if you sold it the day before the 20 years, $46,500. But you would have made $357,000. And if you kept it for 20 years, that would all be yours. So it's still a great program. It helps renters get into the market years sooner. You're building equity while paying rent each month. You build nothing. Even after you pay the city back, you're winning in the capital gains department. If the home loses value, you don't owe anything. So if you don't make any money on the home, you have zero risk. You don't owe the $25,000 back. Housing stability, it's, you never know when your landlord's going to come along and say, listen, you got 2 months to get out, and then you're stuck looking for a unit that's 3 times the rent you're currently paying. So that peace of mind is worth, trading a small part of your capital gain. So, some questions that have come up as we go through this program. What if I sell the house at a loss before the 20 years are up? Do I still have to pay back the down payment? No, as long as the unit is sold at a fair market value. So, you didn't just sell it to your brother for $40,000. It has to be the true value of the home. And again, you didn't sell it to your brother. An arm's length transaction means that it's not someone you're related to or have a relationship with. So, if you've owned a home in the past, you still qualify. Anyone who's paying rent in London or Middlesex County qualifies for this program. You will need to get mortgage insurance. All mortgages under 20% require mortgage insurance. It depends on the lender, which agency you can get your mortgage insurance through. There's CMHC and two other ones. So, this program will require you to get mortgage insurance, and that's just rolled into the mortgage. Are there any circumstances where you can purchase a home over 500,000? No. You can't pay the difference yourself. You can't get a friend or family member to pay the difference. You can look at homes that are more than 500,000, but your purchase price of your home has to be below 500,000. Any type of home can be purchased as long as it's not some weird anomaly like a tree house. So if something seems weird, they're not going to approve that. But you can buy a townhouse, a condo, stacked, freehold, anything, as long as it seems reasonable. What happens if you die? Because my first thought was, hey, I should get my 80-year-old mom in this program, but is she going to last? Well, if the person dies, then that estate would owe back the loan as well as the 5% on any capital gain. Is the loan registered on title? Yes. And we're looking into whether or not this would make it harder to refinance. So when you get a mortgage, that's registered on title, and that just ensures that the mortgage holder gets their money first before anyone else. The city would then go behind your first mortgage holder as they want their money second. If you refinance, then the new mortgage holder would have to go behind the city, we think, and therefore they would want that paid out because they don't want to go behind anyone else. So normally when you refinance, you always have to pay out your debts. If you have a car loan or a credit card debt, you have to pay those out so that the bank can be in first place on title. So we're looking into whether or not that is the case with this, and we will send you an email update when we find out. So this is the type of income that they're going to look for in the application. So any old age security, any Canada pension plan, any other country's plan, employment, self-employment, employment insurance. Um, they want to know about it. The employment insurance obviously doesn't help you get a mortgage. Disability does. But these are the types of income they're going to want to count towards that 95K or 115K. And it's every member of the household that's over 18. And what documents do you need to submit? Anyone over 18 in the household will need bank verification of income and assets done by a financial institution, birth certificates, residency in Canada, paperwork, mortgage approval documents, and the lease showing that you do pay rent with landlord's name and contact. How long does this whole process take? Well, right now they don't have any applications. They're not making any guarantees on timelines. As I said, they don't know. They're giving a 2-week ballpark, but they don't know. And if there ends up being a number of applications, this could become longer. I also asked them when would the earliest closing be. For example, if you wanted to move in a month from the offer, they're planning on 2 to 3 month close. So that's probably what we should plan for too, because you don't want to have a firm purchase and sale and then not get the funds in time. So we talked about you would still need the 1.5% of the purchase price for your closing costs. That would include your lawyer fees, land transfer tax, You'll need a home inspection, which you have to pay for. Most lenders pay for the appraisal, but some require you to pay. That could be about $500. So you'd still need to have a good chunk of money on hand. So that is the overview. If you have any other questions, you're happy to help. If you want to go into greater detail about the mortgage, definitely able to help answer those questions because I know it's hard to know what they'll be looking for. We can also start sending you homes that are in the price range that's acceptable to the program. Right now, it is a buyer's market, so we could send you homes probably up to 520 maybe, and hope that the seller would accept an offer below 500. It depends on how long they've been on the market, etc. But definitely let us know what you're looking for, whether it's in London or Middlesex. This program's open to anyone in either City of London or Middlesex County. And we can definitely get started. The sooner you get this done, the better, because the funds are available first come, first serve. So definitely send us a text or a message, give us a call if you have any further questions.